Hi all, welcome to the next part of our sector analysis. In this video, I'll be talking about the IT industry, and in the final part of the video, I'll be talking about the key performance metrics which will help you understand how to do a fundamental analysis of an IT company. After watching this video, I assure you that you'll know how to let your money do the work for you by investing in an IT company. Before moving to the key performance metrics, let me give you a brief idea about what is Indian IT sector and what does it thrive on. Before 2000, IT companies used to provide services such as HR maintenance and call center services. But fast forward to 2025, Indian IT companies are providing services such as AI driven inputs, consulting, cloud computing, and many others. So from this, we can conclude that Indian IT sector is a service oriented sector. Earlier, businesses would buy software from these Indian IT companies, but nowadays these businesses are buying subscription from Indian IT companies, and the subscription amount is being used by the companies for improving the product. Indian IT sector thrives on its exposure to foreign exchange rate. Let us understand this with an example. Consider an IT company sold a service for $100 in 2013 and foreign exchange rate in 2013 to be as 50 rupees, then the IT company would have earned 5,000 rupees from that service. Now fast forward to 2025, if that IT company sells the same service and the foreign exchange rate is 80 rupees, then the IT company would earn 8,000 rupees from that service. So from this, we can conclude that profitability of an IT company is directly proportional to the depreciation of INR. Now moving on to the final part of the video, that is about the key performance metrics. The first metric is reported growth and constant currency growth. As we have discussed earlier, Indian rupee losing its value also add up to the profitability of IT company. So constant currency growth means actual business performance without adjusting for the exchange rate fluctuation, whereas reported growth adjusts for fluctuations in exchange rate. From the picture, we can clearly see that the constant growth of a business is 10.7% for financial year 23, whereas reported growth is 16.9% as Indian rupee could not hold its value. The second metric is order book. Growing order book is considered as a healthy sign for a company. Hence, larger the order book, higher are the revenues of the company. The third metric is unearned revenue. This usually comes into the liability part of a balance sheet. Sometimes client pays in advance, but work not delivered against these advances are known as unearned revenues. So unearned revenues has to be as low as possible, as this tells us about the timely delivery of the project by an IT company. The fourth metric is unbilled revenues. These are those revenues which are not yet paid by the client just because the invoices are not raised. Sooner or later, the client pays for such invoices. The fifth metric is number of clients and number of new clients added. Indian IT companies offer B2B services. So, number of clients retained and number of clients added are directly proportional to higher revenues, whereas loss of client is a dent on the revenue. The final metric is attrition rate. Attrition rate is the percentage of employee who has left the organization within a given period. For every organization, employees are their highest cost. So when an employee leaves, all the cost that has been incurred to upskill the employee has been lost, whereas additional cost is always incurred to replace such employee. So lesser the attrition rate, higher are the revenues. So in this way, we have covered all the financial metrics that are required to do fundamental analysis of an IT company. I hope you have understood all the key performances metrics. If you want to know about more such industries, please do let me know in the comment box. And if you have liked the video, please do like, share and subscribe. Thank you.